job in the corporate world, go to a job where I have more freedom and more capacity to get into real estate. Did that about 4 years ago. And that's what kind of launched me on the real estate journey. And I started out part-time and slowly built it up and have been able to move into a full-time career in real estate investing. I had two goals. I was trying to, convince my wife and myself and my family that like, this is the way to go. And it was like, I've got to make money. I guess that was the goal I knew about. And so we did. We made like 30,000 off that flip. And that was actually significantly more than we thought we were going to make.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, it's Augustino. For many people, making the shift from a normal job to a real estate entrepreneur can be very daunting, especially when it comes to the topic of raising money and getting credibility with investors. Now, our next guest understands this. He was a physical therapist when he realized his true passion was building his own business and investing in real estate. Now, from there, he took this passion as well as a considerable amount of action and built a portfolio of apartment buildings. He went on to build his company, Threefold Real Estate Investing, where he and his team are committed to forging a path to generate wealth and opportunity for himself and for his investors. Now, with all that, I'd like to welcome Lee Yoder to the show. Lee, thanks for coming on, bud.
Yeah, great. Thanks so much for having me, Augustino. Really excited to be on your podcast.
Yeah, excellent. I think it's going to be great. Now, if you guys like what Lee has to say, you can reach him via his contact page at threefoldrei.com. Okay, Lee, maybe tell the listeners a little bit about what you were doing before and why you made that transition to real estate.
Yeah, absolutely. So I went to school for a really long time, 7 years to become a physical therapist and make you get your doctorate in that these days. So was doing that, didn't love the hours of it. So I actually switched to doing home health physical therapy where I got to drive around and see people in their homes. So my wife loved that. The schedule was great. I got to make my own hours. Frankly, I was hardly even working 40 hours a week, making pretty decent money, but just really unfulfilled. I mean, it was just boring to me. I just wasn't passionate about it. So the company I was with actually asked me to come in the office, be a clinical director. And over the next year or so, I transitioned to be full-time in the office. And I was really actually became more of a director of operations type role. And so I'm not doing physical therapy anymore with this company. And I'm loving it. I'm really loving my work. I'm was getting compensated very well, but now it's not so good for the home life. Okay. I'm not as home as often. I'm kind of stressed out, kind of bringing work home with me. Just feeling like I always need to work more hours. So that wasn't really working for what my wife and I really, had kind of dreamed of for our life and the life we wanted to design for ourselves and our family. So somebody turned me on to real estate, kind of, got that book, ended up reading the Rich Dad, Poor Dad, kind of went down that rabbit hole that a lot of people go down. And I start thinking, okay, so what if I go back to doing home health physical therapy where I have the time and the energy? I'm bored, kind of bored out of my mind. It wasn't that bad, but I was bored. I wasn't fulfilled. But then I'm doing real estate on the side. So that's what I did. It's been about 4 years, a little over 4 years ago now. I left a busy, well-paying, but just very time-consuming, very, just consumed me job in the corporate world. I go to a job where I have more freedom and more capacity to get into real estate. Did that about 4 years ago. And that's what kind of launched me on the real estate journey. And I started out part-time and slowly built it up and have been able to move into a full-time career in real estate investing.
Excellent. Now, yeah. And I'm sure for many people who are listening right now, making that transition is probably the scariest part. I mean, I did it. Right. I did it because I basically got canned from that last job. And I'm like, okay, how many more?
That's one way to do it.
Yeah, well, it's one way to do it. Right. I'm not going to recommend it for people out there, but my journey was a little bit different. But I mean, in your case though, when you did make the decision, you read Rich Dad, Poor Dad, you committed to making and building your own company, making your own way. What did you start doing then? Like, how did you really prepare yourself to take on the role or to switch that role from I guess you want to call healthcare to entrepreneur? How'd you do that?
Well, a ton of education, right? Listening to podcasts just like yours, Augustino. That's what's so great about today. And my job was really nice because as a home health physical therapist, I'm driving around a lot. So I'm listening to podcasts just like yours, and I'm getting educated every day. A lot of people drive to and from work, at least. Maybe not so much anymore, people working from home, but while you're working out, something like spend some time each day educating yourself. So that's what I did. And I really got excited about it. Even when I was in the corporate space, just driving, doing some sales trips and stuff, driving and traveling, whatever. I'm listening, I'm educating myself. So I got really comfortable with the idea. Just, the more you learn about it, the more you see people like you, Augustino, that are doing it. Hey, you're having success. This guy got fired and he went and had success with it. So maybe I could do that too. I think that's a big part of it. And I'll tell you the piece of advice that a buddy of mine gave me while I was working that corporate job that I think really applies today with just what we went through with the pandemic and how that's changed some people's work schedule. Is he said, Lee, is there any way you could do your job from home? Is there any way you could do your job and just free up some time, do it, with more space to slowly get into real estate? And for me, the answer was no. And that's what led me to think, well, what if I go back to doing home health physical therapy? Then I can do that. And so I think a lot of people are finding themselves at home, right? And a lot of people that I know are finding themselves at home with man, I've got a little more time. I've got a little more freedom. I've where I could work really hard, maybe get up early one day and hit it hard, but then have the afternoon off. Maybe I go look at a property. So I think that's kind of cool today. And I love that about kind of where our economy is headed, this gig economy or whatever, where you can kind of mess with your schedule a little bit. And that would be my first piece of advice, is to educate yourself in your free time. But then can you work your schedule to where if you wanted to get into real estate on the side and whatever that means for you, there's a lot of different ways. And I hope they're listening to your podcast, Augustino, to kind of figure all that out. But if you can free up some time and space and energy from your job because you're able to be a little more flexible these days, then I think you can really find a way to get into real estate.
Yeah, I think that's the key right there. I mean, I remember when I made that decision, I was doing single families, small multifamilies, but I never did syndication. We're talking probably about the same time, 4.5 years ago. I committed 100% to training and studying. And because at that point, I wasn't working anywhere. So I was training and studying probably 12 hours a day. I mean, straight. Every single course I can get my hands on. I was just consuming and committing to memory. So it sounds like in your case, you pretty much did the same thing. You made that commitment to really training and studying. So at what point then did you decide to really take that leap and get into that first deal? How did you decide that you were ready to get in?
I got to a point where I had studied enough. So I started with a flip. I flipped a single family home. That was the first thing I did. And I had left that corporate job and had been working, just doing home health physical therapy, educating myself for almost a year, probably 10 months or so. And I just got the point, Augustino, where I was I just couldn't wait any longer. I was so excited about it. I just want to get started. I kind of forced my way into it. My wife did kind of ask me at one point, she's like, do you really think you know everything? And I said, I think I know everything I can learn from a book. I can't know everything. You have to jump in. I was like, everything else I have to learn is on the job training, right? I mean, I see smile. You know what I'm talking about? I had listened to enough books. Enough audio books. I had listened to enough podcasts. I knew there was a lot I still didn't know, but I knew the only way I could learn that was to jump in. So I just got to that point where I've got to jump in. I've listened to enough podcasts that the rest that I have to learn is going to be learned through action and actually doing it. That's what I decided I had to jump in.
I mean, I can tell you right now. I mean, there's stuff that I'm doing right now. We bought the Rockefeller Building in downtown Cleveland. We are raising money for this asset, construction financing to be more precise. So we're talking to lenders. I've never done an $85 million loan before. I never did one of those before, right? So that's there's no book out there that'll tell you this is how you get an $85 million loan. So it's kind of like you get it's trial by fire in some cases.
Yep.
I'm not saying everybody out there should be doing an $85 million loan, but to your point, I'm glad that you finally decided, you know what? If I can't find anything, I'm going to start with a flip. That's what I'm going to do. Yep. And you did it. And how did that go?
It went well. We made money. It was the first time we kind of just went and did it by ourselves. I mean, I hired out some work, but I was the one managing it. And so I had two goals. I was trying to, convince my wife and myself and my family that this is the way to go. And it was I've got to make money. I guess that was the goal I knew about. And so we did. We made $30,000 off that flip. And that was actually significantly more than we thought we were going to make. It went well. The market's been good even for the past 4 years. So the market really helped, but we did well. I did a ton of work myself. The problem with that, Augustino, was it was like I was back in that corporate job.
Yeah.
Now I'm working a full-time job and doing a flip on the side. when it came down to crunch time, where it was like, we hit February, my wife's like, Lee, you want to have this ready by May, right? Like, think about all the work that's left to do. She's like, it's a lot. Like, you got to be out there every night. So I was out there, either I'd go out in the morning sometime before the kids even got up. I'm a guy, I like to wake up at 4:30. I'd go out there in the morning because it was in the country, so I wasn't disturbing people. So I'd go out there in the morning, I'd go out there in the evening, go out there every weekend. And so it's like, okay, I made an extra 30,000, but like, I took almost that much of a pay cut, leaving my corporate job to go back to home health physical therapy. So what did I really gain, right? It's just another job. And that's what you end up finding out. And some guys put some systems in place and they can do flipping to a different level. But for me, flipping was just like being back at a job. So it was like, cool, you can make money at real estate, but you can make money doing a lot of things. It's just trading your time for money if you're doing flipping.
Hey, you know what? And that's the thing. I mean, we have a coaching program. Some of these students, they want to get into the whole flipping thing with the understanding that to your point, you at least get into the business, right? So it helps build credibility with potential investors to say that you're at least doing something. You're doing something, and gives you a little bit of dry powder in terms of that cash that you'll make. Provided you take that money, you put it aside, don't spend it, and just keep doing that over and over again. That's a good way to do it. But to your point, though, I mean, you're giving up a lot of time there. I mean, it sounds like you were doing some of the work there too.
A lot, yeah. I spent over 500 hours during the time I was doing it. I kind of kept tracking. Yeah, I put a lot of time into it.
So you earned every bit of that 30,000.
Yes, right.
Yeah. So it isn't like free money. It's earned. That's earned. You made that money. So,
right. Yeah, I worked for it. I traded my time for that money, just like you can do with any job.
Yeah. Yep. But the thing is, though, it's like, so you did that, and I imagine you probably did a few of those flips then. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.
Well, next I kind of basically flipped a duplex, but I rehabbed the whole thing, gutted it basically, got some renters in there. I did manage those renters for a little bit, realized then that I didn't want to manage, didn't want to be a property manager. So that was kind of good for me. But basically I didn't even own that for a year and flipped that and sold it. So kind of flipped the duplex. And then I got into multifamily, but I think you make a really good point, Augustino, because once I got into multifamily and was ready to raise money, I was no longer a physical therapist trying to raise money for real estate. I had completed successful flipping. Yeah, again, it's totally different. But for most people that you're going to raise money for, they just see real estate. And it's like, dude, Lee seems like he kind of has it going and knows what he's doing in real estate. Because I know about this flip he did. He was successful in that. And then he got this duplex. He did really well with that. Now he's trying to get, the next one we did was a 16 unit. Okay, like I've seen him do it. And we end up just having one investor, and it was a family member, but they had seen me do that. So I think that's a really good point. That, I'm not bashing flipping at all. People tell me they want to get started. I think that's a great way to get started. Flip a house. You learn so much. For me, I learned, okay, I don't want to flip. But to your point, now when it comes time to raise money, because we didn't have to raise money for those first couple, but when it comes time for raising money, now I do have a track record, and it's hard to go out. I mean, if you were trying to raise put up money for an $84 million loan and you'd never done anything in real estate, that's not going to go very well, even no matter how successful you are at other stuff. But if you have at least a little bit of track record, so absolutely doing the flip, getting that duplex gave me enough of a track record to raise just a little bit of money for a 16 unit. And then, here recently we did a 45 unit, but we've just taken those steps enough for people that have seen what we've done and seen the success, seen our integrity, our work ethic, our perseverance with it. Okay, I'll invest with these guys because they've shown through these little steps that they're ready for my money.
Yeah, and that's the thing. I think when you take that first step and start taking action, that's the key right there. You took action. You got into that house. Do people really want to flip a house? I mean, some people do. They love it. Some people don't. I mean, it's not their bag. And that's okay. But if you would have hired a contractor to do that work, I don't know that you would have made $30,000, right?
No,
probably not. Yeah, it's like you paid for that, but you did it. That's the point. You did it, right? And you did it again. And it's not because of the amazing giant returns you made, but it's the fact, just to your point, you demonstrated to a potential investor that you are in this game, like you're seriously involved and entrenched in the game.
Yep.
And enough to the point where you quit your job or you significantly cut your job hours to focus on this business.
Absolutely.
And I think that says a lot, I believe. I mean, it's funny. I was doing an interview yesterday. I was actually being interviewed. And that's one piece of advice that I gave to people is that the audience, meaning your investors, need to see that you are in the game. Investors know that I'm in the game. There's no question.
Mhm.
Like we've done many deals. We've raised tens of millions of dollars. We now have we have the Rockefeller. We're doing other development deals. There's no question that we are real estate developers or multifamily experts, right? And that's going to help further leverage as you keep scaling up and further into larger deals. That's how you build a track record. And in your case, you built your track
Absolutely.
record. You started with one single family, And I think in your case, you sound like you might be a pretty handy guy, right?
Mhm.
What do you recommend for someone that's maybe never lifted a hammer before in their life? Like, what should they be doing? Would you recommend to do something similar to this, or would they partner with somebody? Like, what would you say?
Yeah. I think partner. Yeah, I think partner. I think, yeah, utilize your strengths. For me, I did feel like that was a strength. I've never done it full time, but my dad is full time in construction, has been his whole life. And during summers when I was in college, I did residential construction and learned enough. And I really enjoy it. So my wife and I, because she's like a stud decorator. We staged the whole house on like a shoestring budget, and she really enjoyed that. So we enjoyed that. So for us, that fit some of our strengths. If swinging a hammer doesn't fit, any of your strengths or any passion that you have, then absolutely, I would partner with somebody and use your strengths or your time, whatever you've got to bring to the table. Use that. So yeah, partner with somebody for the other parts.
Yeah, and that comes down to building your team. And we talked about
Mhm.
this whole topic on other shows. But if you are say you have some money, but you don't have any background in terms of developing, swinging a hammer, you don't have a pickup truck, that kind of thing, you partner up with somebody that does,
Yeah,
right?
right,
And,
right.
vice versa. And I think to your point though too is finding a decent property manager. I mean, you flipped that house and then you're handling that duplex for some time before you actually sold that too. Did you ever think about keeping that duplex and doing more smaller deals, or were you sure that you're just going to go straight into multifamily and leave the whole single family space behind?
Yeah, I was pretty sure. I just feel like if you don't want to, if you want to manage your own, I actually think small multis is like maybe the best way to go. If you want to have like just a small portfolio, it close to you and you manage it. I've got several buddies that do that and kill it. I mean, and have a great life. I mean, they've got some systems in place and they've got some people that work for them, and you can have a nice little portfolio. You build up 50 units of duplexes, quads. Maybe a 6 or 8 unit here and there in a smaller area. You can crush it. I just knew that's not what I want to do because I want nothing to do with managing tenants. I don't want to be a landlord. So for me, that meant going bigger where it makes more sense to have a property manager, because I do think you can have 50 units, like I said, with a portfolio just around you, duplexes, and have somebody manage it. But I mean, about it, Augustine, but like the scalability, the economies of scale just make more sense the bigger you get. And I really always gravitated toward that idea. So I knew I wanted to keep getting bigger. So with that duplex, I always knew I was going to try to sell that and level up.
Yeah, no, you're 100% on point there. When we were first starting off building out our portfolio, we had some smaller units, some smaller deals, and now our minimum deal is 100 units, and it has to be. And even in that point, we still want it to be close to other assets that we already own, so we
Yeah.
get some economies of scale that way.
Mhm.
But you're absolutely right. The smaller deals require a very different touch. It requires a very different touch.
Right.
It's you really have to, if you're going to self-manage it, that's the only way you make money, in my opinion. It's very hard to hand it over to a property manager and have them manage it for you and really get that thing to operate profitably. But
Yeah, I agree.
yeah. So and I think too, though, with some of the deals that you're doing now, you're raising money for a little bit larger deals than that, right? A little bit larger deals than the typical
Yeah.
and
Yeah. The one we just closed on was a 45 unit apartment
cool.
building. Yep.
Cool. Tell us a little bit about the investors on that deal. Like who'd you talk to? What was your process? How'd you
Yeah.
find?
So, on that one, August, I think the next one's going to be a little more difficult. On that one, we had a pretty good idea who was going to invest with us. It was some people that had invested with us on previous deals, because we sold a couple before we got this 45 unit. So we had cashed some people out. So we knew they were going to come back in with us. That's, one of the best ways to get investors, right, is do really well with them, and they'll want to invest more money. So we had a pretty good idea, but a couple people came from, I joined the RIA in Cincinnati, so the Real Estate Investment Association in my local city. I'm kind of between Cincinnati and Dayton, Ohio. But I joined that, and I was interviewed one time or a couple times, like for the apartment focus group within that RIA. I've been on a couple other things. So a couple of the guys that invest with me just heard me speak and reached out to me, and I was talking to them over 6 or 8 months, and they're yeah, we've been interested in investing. We like what you had to say. We like what you've done, because at that point I was sharing about some of the deals that I had done, some of the smaller multifamilies that I had done. So when this 45 unit came back, I'd been talking to these guys, and I reached out to them. Hey, you said you were interested. We think we got a good deal here. Would you want to jump in on it with us? And a couple of them did. And then a couple of them on this one were close family and friends. Again, they had seen what, kind of been watching what I had done. A couple of them had already invested with us. So that was kind of a mixed bag on this one. I think going forward, it's going to be more and more of people that are seeing what we're doing. And with this 45 unit, one thing we're trying to do, Augustine, I'm sure you understand, is like kind of promote what we've done. Because again, we want other people to see it, and we want them to be able to do it with us. We believe in multifamily for us and our passive investors. We know it's great for them. So we're kind of promoting that so they can see that, and then they'll want to get in on our next one. But that's kind of how it worked with that first one that we really raised. We raised $550,000 for that one. So not a huge raise, but definitely by far the biggest we ever had. I mean, we hadn't raised much over 100 before that point. So it was big for us.
But you know what, though? I think that something to reiterate here for those listening, this isn't anything that you're just going to pick up a phone and someone's going to hand you a check. You were talking to these folks for a good 8 months. And even prior to that, you were in the RIA. So it's like you're a known person in the RIA, the Real Estate Investors Association, which, by the way, guys, if you're in the real estate game, you really should join a RIA. I think it would be very helpful to network with other folks, right? But you kept on, you were in touch with these folks over those 8 month period, right? You attended the meetings, you're always getting in front of them, you're talking about your deal flow, right?
Yep, absolutely. Yeah. Yep. Always talking to them. Yeah, just keeping them interested. Making sure they're ready, because if you go, 4 or 6 months without talking to them, it's a very cold call. Like you said, then you're just calling like, oh, hey, remember me? Or especially if you're trying to introduce yourself for the first time, do you want to invest with me? There's nothing there that would make them want to give you. I mean, it's a lot of money, right? For most of these people, our minimum is 50. Even if it's 25, that's a lot of money, for someone to I'm just giving to you. Like, it just it sounds foreign to people. It's, even though you can lose it, I think much easier in the stock market, with a crash, real estate apartment buildings don't crash like that, in my opinion, but still they're giving it to you, really, is what they're doing. And that's a lot to ask for somebody. So they need to feel like they know you and can trust you. Yeah,
but then that's the thing, to know you, like you, and trust you. Those three things, and I've heard this from many, many, many guests. This is the same thing. Know you, like you, trust you. They have to, and that's the thing. The only way you build that is to talk to them on a regular basis. They get to know you, they get to like you, and of course they get to trust you because you're in the same group that they're in. I think that's absolutely huge. Absolutely huge, and to build that rapport with folks. And not everyone's going to invest, right? That's the thing.
Right.
And that's okay. That's all right. So you're saying the next one's going to be a little tougher. Why do you say that?
Well, we used up some of the easier, like family and friends. So some of the family and friends that they're investing with us, honestly, because they know us and trust us just as people, hey, I know Lee's not going to let it. Like, I guess I don't know that much about how good of a real estate investor he is, but I know what kind of guy he is. I know he's not going to lose our money. I know he's a man of integrity. So people investing with us because of things like that. And on the next one, we won't have as many family and friends because we kind of used their money in that first deal. There'll still be some of that, but it'll be more people that we just, that don't know us before knowing us as an investor. And so we're convincing them more that we're a good investor.
That's right.
Yeah.
And that's worth noting as well, because you're going to have to put together in your credibility book something that you've done in the past, right? Here's all the deals. Here's a track record that we've done, and somehow propagate that in a legal way, because you can't really share, we can't share future deals, but we can share past performance with people, right? And that's the way you do it. I mean, that is ultimately the way you get in front of investors on a go forward basis. And I guess for many folks that might be listening, that's it's a lot of work. There's no mistake. It's a lot of work, but the reward at the end is certainly worth it. Right?
Absolutely.
Yeah. What would you do differently given that you're at this point in your journey today, what would you have done differently?
I think I usually say networking more. I really think when you meet the right person or the right people, they can just, people explain it in different ways, but it just allows you to jump forward. I mean, you meet that person that just says, hey, don't flip another house. For me, because some guys, I know different guys like Michael Blanca is a good one. He's got a great multifamily podcast, and I think he said he flipped like a few dozen houses before he was like, this is just another job. For me, it was just one. I only flipped one house and I was like, this is just another job. But it was because honestly, Augustine, I was listening to guys like Michael Blanc while I'm flipping that house. And I'm listening to him going, hey guys, I found out flipping is just another job. And I'm doing this flip. And I'm like, yeah, this sure feels like another job. So even that's kind of like networking, but you go out and you meet these people. I mean, for me, when I finally joined the RIA, and it wasn't until a couple years in, I already had the duplex, and I go to the RIA, and then I find out that the RIA has an apartment syndication focus group. And I go there and the guy is teaching us how to underwrite apartments. And it just all clicked with me. And if I had started a year earlier, I would have gotten into apartment buildings a year earlier. So just by meeting this guy and learning this, I would have jumped forward. So you can't network too much. I mean, you can go to things and sure, you don't really meet people, but man, you're going to meet that one person or those couple people that really just jump you forward. And it's just a jump that you can't make on your own.
That's right. No, it's the networking thing is absolutely huge. And, I personally made that mistake myself in corporate America. When I was a C-level executive working in tech, the way I felt anyway, was if I show up at the job early and I ran my team and my team did amazing work and I stayed there late, I did everything I was supposed to do. The systems kept running. We kept on putting out great software. And we were making money. Who cares? Why do you guys want to bust my chops about anything? Well, it turns out that one thing I did not do was build my network within the company or even outside the company. So when they finally got around to riffing me, get rid of me, I ended up having to start from square one again. No one knew me. And it's funny how networking it applies to real estate, it applies to corporate, it applies to everything.
It's universal, absolutely
it's
universal,
right?
Yeah,
exactly, and that's the thing. I mean, it sounds to me like you've realized it, and it's like, and now you're really pushing hard in terms of the networking side of things. I mean,
absolutely,
that part is absolutely huge, absolutely.
Yeah, right.
Yeah. So if for someone listening right now, they probably got, hopefully they got some value out of this conversation. What bulletproof advice would you give them?
Yeah, I would say, August, first, just figure out what do you want to get out of investing? What kind of investor do you want to be? I mean, first, you got to say, is it active or passive? For me, I knew I wanted to be an active investor. I knew I wanted to get all in. Some people might want to be passive. So they look to someone like you, Augustino, that's doing these big deals, and they see like, hey, what if I could have a slice of that pie? I want to be a passive investor. And that person, there's my goodness, there's nothing wrong with that. If they're doing that job, and they're really enjoying it and they're making good money, just put that money to work for you. Don't go, like you said, know what your strengths are. If you're not a person that wants to swing a hammer or flip a house, you don't have to become an active investor. If you want to be an active investor, okay, what kind of active investor you want to be? Again, do you want to be a flipper? Do you want to build a team like that that's flipping a bunch of houses, that's making a bunch of money, but as soon as you stop flipping, the money goes away? Or do you really want to build up a portfolio and build up passive income? And how do you want to do that? Do you want to build a team? Do you want to build a big business? If you just want to, hey, no, I just want the passive income, I kind of want to do it myself. Yeah, just go for the small multis, manage them yourself. If you say, no, I want to build more like a business where I'm working on the part I enjoy, but I'm going to partner with people to do the other parts, I'd say go into multifamily. Get into multifamily because you can, partner with people. One's your acquisitions guy, one's raising money, and then you partner with a property management company, and you're not even doing any of that, which is what I love. That they're the ones actually managing the tenants and all that. So you really got to get clear on what you want, because there's a lot of ways to make money, but whenever you say yes to something, you're saying no to something else. And for me, what's most important to me, and I mean, I stick by this, is my faith and my family. And I want time for that. And I want to have time to actually make that the most important thing. So for me, I've got to invest in a way that I'm not doing flips where, hey, all of a sudden we got to get this house ready and everything's failing and the contractor didn't show up. So I got to be all in. And now I've got no time for my faith and my family. That's unacceptable to me. So I've built a business and crafted it in a way that we can invest where I do have time. And I want that for my investors too. That's what's so cool to me about apartment syndication and multifamily is I can do that for my investors because they can give me the money that they've worked hard for, and I can make that work for them to make them money without them working more, right? You don't, now once you give me money, you don't have to do anything else. I'll make money from that money for you. And now you've got passive income coming into you. So if you're looking for time, figure out ways to invest where it actually gives you more time instead of you just giving more time and making more money on the side.
Actually, yeah, love it, love it. And that's the thing. Become clear on what you want. Become clear on what you want. Yeah, perfect.
Absolutely.
All right, guys. Well, if you want to reach out to Lee, you can reach him via his website at threefoldrei.com. Hope that you're able to see that you can build a future in real estate. It does take a lot of work, and there's various ways of doing it. You can go straight into syndication, like what I did, or you can do some single families and some duplexes as well. There's a variety of ways of getting into it, but it comes down to building credibility, practicing your pitch, building your network, and then execution. You got to execute. That's the secret sauce for everybody out there. Anyway, thanks for tuning in, guys, and I'll see you in the next episode. Take care. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.